While I'd love to come to you and talk to you about my tower garden or my quilting or all of the other interesting things that I think I do, I want to talk to you about health insurance. So I wanted to start with the basic principles and why people get so confused by health insurance. So first of all, health insurance has two paths that you can take. It has a traditional path that the companies and insurance have taught us to use, and those are typically fall under group insurance or marketplace plans. So when I say marketplace, what I'm really talking about is it's called Obamacare, Biden Trump Care, ACA. It's got many names. Most people know it as people either love it or they hate it. In most states right now, you can only get HMOs. There are a few states that still offer PPOs, but it is going to be very limited. So those are the marketplace plans. They have a specified period of time in which you can get in the marketplace. Of course, if you lose coverage for any reason, if your lifestyle changes, meaning you move out of the network area, you get divorced, you get married, you have a baby, there's some instances in which you would have a qualified event. Most of the time, it's because you've lost credible coverage through your employer. So when that happens, you will have an option, if it's offered, to do COBRA coverage through your employer, or you can go on the marketplace. So there's also group insurance. So group insurance is offered by whoever you work for, but there's also group insurance for people who own small businesses. So as a small business, you can qualify for group insurance and you can get plans like usually Blue Cross Blue Shield, United, maybe a Cigna and an Aetna. It just depends on the size of your group. In the state of Texas, we allow people with either two owners or an owner and employee to gain coverage. And that, again, affords you the option of getting something very traditional. And some people want that. When we can't afford that or we don't want that and we want some other options, maybe we're more homeopathic in nature, we like choices in our network, maybe all of those choices we talked about are not affordable and we don't want an HMO, then we can go with non-traditional. Non-traditional is going to be under the realm of short-term plans as well as indemnity plans. And the difference with those is you don't have to have an open enrollment. You can sign up for those at any time. They are not considered what I'll say credible coverage. So they don't fall under the ACA guidelines. That means they're not under the government restrictions of timeline. You can sign up for them at any time. However, they are underwritten plans. So what that means is that the insurance company gets to decide who they want on their plan, and they get to decide that by their underwriting guidelines. So you have to be in fairly good health, overall good health. There are some restrictions. So if you've recently had a surgery, recently had a major thing in your life, an illness, you take an expensive medication, you're probably not a good fit for those plans. But if you're in overall good health, you maybe take some blood pressure medicine or cholesterol medicine or thyroid medication, which most people take today, then you could be a really good fit for short-term or indemnity plans. So the difference between short-term and indemnity is just that short-term is going to have a specific term on it. It's typically got a deductible and a copay. Again, there's different plans out there. There's probably about 15 different options that you could go with varying deductibles and varying plans and varying network. Any of those are going to have pre-existing conditions. So they're going to look at anything that has been prescribed, treated, or diagnosed in the past 12 months, and they won't be covered for the first 12 months. So again, be cautious of the plan that you're picking up and be aware of what you've been doing in the past 12 months so that you don't get caught expecting to have something covered that isn't then going to have a benefit or be covered. Indemnity plans really act as a very flexible option. They're PPO in nature, so it allows you to go in or out of network with your provider. It allows you the choice of who you want to go to, or you can stay in network and you can use your card just like you would traditional. Indemnity just means that it has a specified benefit for specified services. So instead of having deductibles, copays, and coinsurance, I call that a quid pro quo, you now have a fixed benefit towards those services. So I'll use an example. I go to the chiropractor. I pay the chiropractor $50 because they're not in network, and my benefit is $120. If I have $120, my benefit is $50, I pay $50, I file the claim, I get $120 back. I now have a $70 excess indemnity. That comes back to me. I get to choose what I want to do with that excess indemnity. I can use it towards a future chiropractic visit. I can put it in a savings account. I can go buy shoes, clothes, plants, whatever I decide I want to do. Typically, I will use that again for another chiropractic visit, just so that I'm smart about my health insurance journey. So that's kind of what indemnity means. Indemnities will have many of the same things that people are most concerned about indemnities having. Again, depends on the plan and it depends on the network. So you want to be with somebody who understands the difference between those plans and has access to multiple plans and options for you so that you can discuss some of the positives and the negatives of those. And then you get to decide. That's the beauty in this. You have a choice in this journey, and there's options out there in this journey. So if you want to know more about health insurance, hit subscribe or reach out to me. I'm KJ, your forever agency, taking the hell out of health insurance.